We are looking at the Dow Jones, the Australian dollar versus the US dollar, UK Brent, and gold. I've outlined my thoughts and views of the market across the four here for you guys to go through and have a look at. But as far as the technicals are concerned, we Good afternoon, ladies and gents. Good to see you. Glad to be back in the hot seat. We are going to be focusing on market report analysis this afternoon. Good digging through the report and sort of having a look at where the commercial positioning is taking us this week. Looking at if there's any sort of key markers that we need to be aware of. Obviously, it's a very, very quiet economic week this week. Calendar is pretty much dry. We have a couple of things to go through, but not really that much predominantly. So we will get through the report and then we'll finish up the session with some report on the US indices for our breakout session this afternoon. And I've got to clear down the cobwebs from my brain. So, starting off with the top of the report today then, market trends and opportunities. As you would have realized by this point, if you downloaded the report already, the report is only 2 out of 3 pages, and the first page, there's no point copying the prior week's information because I wasn't here, so I didn't get to update that part at all. There weren't any trades that were taken, and so we were pretty much flat. So, market trends and opportunities this week, we are looking at the Dow Jones, the Australian dollar versus the US dollar, UK Brent, and gold. I've outlined my thoughts and views of the market across the four here for you guys to go through and have a look at. But as far as the technicals are concerned, we are looking at the potential for a bounce back in the US 30 Dow Jones for a continuation to the previous highs at the moment, which I still feel is pretty key. I think that's going to be the one that plays out this week. We've got the Australian dollar versus the US dollar, which I'm on the fence with. We're currently trading at the median. I think we could literally see a decent sell-off or a decent rally from this point on. We're looking for a breaker structure upwards up there to the high. It's not the previous major high. It's actually this nicer, intricate level of liquidity beforehand that I'm really looking for. The short is down to the most recent point of liquidity, so that's actually the nice big inflection point. We can see the big bullish candle coming away from there. So if we do sell off, that's going to be the clear area for a target profit. Down here to gold, obviously we've just been looking at the gold chart. We are trading at the median of the margin on gold at the moment, so either looking at the sell-off back down to the previous lows or the big breaker structure for a rally back up to the previous highs on that one. We will not, I believe, see any kind of major positive or negative imbalance of price this week. I still think the range continues regardless of the NFP data. The jobs data has, of course, helped assist gold in the rally that we've seen, but it really is going to be the breaker structure above here that sells me the idea of taking a long above and heading back up to the all-time highs there. And then finally over to the left here, we've got UK Brent at the moment. Looking long this week, I think we've come back down. We had a really nice push into liquidity last week to finish the week off. We've started with a bit of a bullish candle. It's not huge by any means. We could still end up the day with a red candle on this one. But I think if we can get the breaker structure there, we've still got a really decent trade in the tank to the previous high. And if we break the structure of the high, it's back up to this level, definitely for me, for UK Brent. And I think we're really priming at the moment for the energy markets. We've seen a lot of stagnation in them, but things are, I don't know, things are building. There's definitely things building at the moment. We've got economic indicators all over the place pointing long. There's plans to increase the output by 547 barrels per day in September. So, I think the demand's there at the moment. We've still got geopolitical situations going on as well from obviously Russia and Iran. So I've put my thoughts here. You guys can dig into that But there's definitely fundamental bias to buy into oil markets at the moment. So I think we've been stagnating for long enough. I think let's get some money in there, get some money at work, and hopefully this week we'll see some kind of return on investment for UK Brent longs and US crude for that matter as well. So down to the market challenges this week, guys, there wasn't actually anything that the model gave me. So there's literally, as it says there, there's no data to display. So I've obviously, I've dashed that one this week. It is simply just not enough economic data to utilize this week with what's going on. And the ones that I've chosen here, obviously the four major instruments that I'm looking at this week, that there wasn't anything that was going to affect them in particular, so we skipped that one out. Down here at the state structure volatility index, nothing really notable to look at apart from, I would say, UK Brent. Gold was already quite bullish anyway, and that doesn't come as a surprise when we consider last week's NFP data. UK Brent is the only one that's a notable call out because it's actually risen quite significantly from where it was before a couple of weeks ago. And that's now at 60.17%, as you can see right here, which probably means there's going to be a decent bullish breakout within the next week, I would say. And then we've got the VIX, and the VIX is down at 20%. So volatility very, 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 very low, which kind of counteracts some of the plays that we've been looking at. But I think based on what we're looking at from a technical standpoint this week, we're not actually looking for any major explosive breakouts. I mean, the US 30 Dow Jones is just a move to the previous high. Aussie dollar is exactly the same. UK Brent is exactly the same. And gold is exactly the same. Not a single one of these is actually a confirmation of positive or negative imbalance of price. These are just normal runs to the previous high or low. So that's no surprise there. So now digging into the economic and order book impact report, we've only got two major ones that have reached the model's sort of, the model was spewed out, I suppose you could say, for lack of a better term here. The BOE interest rate decision is this week, so that's number one that's affecting the market from a broad sense. That's reaching a 4 out of 10, so not that great. And we've got Canadian unemployment, which is actually a point lower than that of 3 out of 10. So that is literally the major economic indicators that we have to utilize this week that could drive market price action. And that's aside from earnings. Now, obviously, I don't cover earnings from the economic scale, the economic side of things, but the earnings are out, and that's something that should be, what can I say? It should be something that you guys take into consideration this week with the US 30 Dow Jones, especially. Which will play a part, and it will play a pivotal role in the NAS 100 and the S&P as well. So as we head down then, pretty much balanced in terms of asset class impact. Money flow by trend, again, there's just not a bunch of stuff that's really notable apart from the commodities, 60%. That's also worth a bit of a call out, I suppose. There's a lot of money flowing, a lot of inflow to commodities at the moment. Nothing else that's really over and above what it was a couple of weeks back. Going down into equities and focus, really nice basket this week. Spotlight equity of the week, sterling infrastructure. Obviously, I've listed some thoughts there as well about what they are, why it is a good call out from myself. So worth having a look at that one. And then finally, institutional buying interest by sector, which has now actually scaled up in its data. Now we have the actual explicit number of inflow to each of these sectors, which is actually really quite cool. I don't know if it's going to exactly benefit you guys or not, but it's really interesting data to actually look at. So there's been $1.09 billion inflows from hedge funds into the financial sector. 0.93 billion into technology, 0.69 billion into industrials, and 0.65 billion into emerging market equities. So interesting data there. Certainly, if we're seeing, $1.1 billion flowing into financials this week from hedge funds, then it's probably worth having a look at buying into some of those, maybe financial ETFs, maybe short holds, 2-week buy and holds, something like that. You can definitely turn that into money, 100%. It's just how you want to use it. If you guys want more information on that, maybe carry out a session or two every now and again. Obviously, I know it's not going to be an everyday kind of gig for many of you, but if you want to do a dedicated session on this, then I'll be happy to do that. No problem at all. And that really wraps up the market report this week, guys, in a nutshell. I don't think it's going to be an incredibly busy week in terms of market volatility and what we've got to work with. Obviously, you've seen that the economic impact scale is pretty limited at what it's chucked out. The BOE interest rate decision isn't even going to be one that necessarily affects us. It's not even going to cause that much of an impact, I don't think. Canadian unemployment, again, might cause maybe a 15 to 20 pip spike in the USD CAD at best. But it's definitely not going to be like a major market driver that we're all primed and ready for. So I think it's going to be a pretty quiet week. I'm not too disappointed with that. Obviously, you get back into it. But yeah, that's basically where we are, I suppose. So please feel free to go and download your own copy inside the trading room. It is in the My Report channel, so you can go in there and download your own copy. For those of you watching this on YouTube, hope you're all doing well. Hope you had a great weekend and you have a great trading week ahead. You too can benefit from this market report. All you need to do, sign up, free member, join the general chat inside the trading room, and you can download your own copy there as well. It is ready and waiting for you. Right, so back to what's going on with our US indices then. Let's check out the US Dow Jones, the NAS, and the S&P for this afternoon. So, some great margin of availability here in the Dow. We've probably aiming to trade within the liquidity at the moment. I don't want to remove this analysis just yet, but we're going to try and ignore it. So from a 1 minute perspective, so essentially we've got the floor here, really nice impact point there as well. Market comes back down, inflection rebound. We've got the nice bounce back up. It's almost a mirror image of each other. So that's really nice to see. It's definitely a utilized level. If we drag this down to here, we probably have a pretty decent trading margin down to there as well, where we can get in and out of the market. Bear in mind it is just a Monday, so we don't need to go and rush ourselves into a number of trades here. And the long that's the TP for it. And ultimately, guys, the entry for this one's going to be the breaker structure above that level in there, I think. Let's go down to the 1 minute time frame and double check things. So down on the 1 minute chart, we can certainly get a little bit more clever with this. And thin that up a bit, have that there. So that's good. Probably look at the breaker structure being just a breakout underneath this level, frankly. So then we'll be looking at the breaker structure around here. We'll have a nice stop loss, margin above there, 43.7870. Target profit down there, looking at approximately a 1 to 2.6. That's actually a really nice balanced trade. I'm liking that. Good margin of availability. You've got a TRF possibly in there, but I think if the market's going to be selling off, it'll certainly head down to that level before rebounding back again. Yeah. So that's the big one. That there is actually quite the level. But this is the bigger level of liquidity, isn't it? That's actually the big move back down there, isn't it? Could look for an even larger trade as well. I can't see it happening all today, but you could potentially be looking at something like this as well for a 1 to 3. I'm gonna leave that in there when I send it out to you guys, but that is not a market open trade to necessarily take today. That might be something that we look at taking tomorrow as an intraday style trade. Possibly. I like that. So it's worth exploring. Very nice entry. Very, very solid margin. It's not failed. Yeah, it's not failed. So it's got a great success rate as well. So I'll leave that in there. That's kind of a tentative one. I'm going to put this one in there as our market open trade of this afternoon. The long, unfortunately, it is not that great, to be honest. I'm not really that happy with the available margin. It's going to be pretty tight, guys. If the market breaks out big time this afternoon, I think you're going to be pretty hard pressed with spreads to make a decent profit out of that one. I mean, even look at that, it's a 1 to 1.84, and that's just in the pre sort of market setup. So I'm not really that happy with the long. I think if we can get, I mean, the market's trading right down here now. And what I was thinking initially is that there is the breaker structure for the long, right? So if the market can come down here and then break back up, then we have the potential for it. And this really does maximize the profitability of that long opportunity there as well. So if we have, say, an entry, let's say an entry at around 43,805, stop loss is going to be sat on top of the big, on top of the zone down below. That's going to yield a 1 to 3.2. So that's starting to look a lot nicer now. And I think that's a pretty good goer. But this can only happen if we get the market coming down here first. So the market, I'm just going to make that really noticeable. So yeah, the market has to reach this level first before we get down there. And that's non-negotiable. Okay, so that's going to be the setup for the Dow Jones this afternoon. So let me download that. Okay, next up, NAS 100, 15-minute time frame. So, yeah, right. So NAS 100. Let's get rid of the last 2 weeks ago stuff. Right, so the NAS 100 at the moment looks pretty similar. I imagine pretty similar to all three of the indices. We've got this area in here at the moment, which is our structural point for the short, I would say. We've got a nice target profit as well. Target profit's going to be about there. That's a really nice short margin. On the 1 minute time frame, I've already seen the breaker structure as well on the 15-minute chart. And that 15-minute breaker structure is going to be right in here. Or the 1 minute breaker structure, sorry, is going to be right in there. Now that's quite a distance away from where we're trading at the moment, but it is the one to go for. So by this point in time, when the market reaches this level, I should imagine the spreads would have tightened right up. They're only going to be wide for, a few minutes, maybe 5 minutes or so they're widened for. And that's still yielding a 1 to 2.5. So it's actually a really nice trade idea there. So that's going to be the short for the NAS 100. The long's actually, we've got this really, really nice ceiling in here. But honestly, it's not a completely easy trade to take. And again, this is because of trading availability. It's because of the margin available, right? We've got that level in there from low 1, low 2, low 3. Really nice point of interest. If we drag that one along, it absolutely is the point of which you want to consider entry upon. Now, if we can thin this up a little bit, make it a little bit more tidy, you may get a decent trade in there, but the market has to reach this level first. Okay, so you've got to come down here, reach this level, and then buy back. And the opportunity is only going to take place once that's been done. And you're looking at around a 1 to 2.1 out of it. Okay, so that's your long. Very, very tight in the long side. So, I mean, looking at these highs at the moment, I don't think we'd be breaking our rules by simply thinning that one up a little bit as well. So, obviously, increase your target profit a little bit, and that's a 1 to 2.3. So, that's fine. We can leave it there. This is a huge no man's land. I do not, and repeat, do not want to take the trades between this area and this area. This is not the same as the US 30 Dow Jones in the fact that we are clearly trading above a 15-minute point of liquidity here, not daily. Okay, so I'm not going to risk the market, taking trades between here because this has got a lot of money in it. We've seen the points of inflection. We have the proof available, so it increases our level of risk. So we're trading above or we're trading below. So we can download that one. And then finally, bring it over to the S&P. Start on the anchor chart, 15-minute time frame. So a little bit scale out here. We've got nice floor down there. We've got we've got the ceiling above. Whoops. Come on, third time lucky. We've got the ceiling above, which is in here. So we've got a really nice margin to trade in the S&P. We're currently trading directly underneath liquidity, so we're not going to be able to take any long whatsoever today. It's a short bias only. So through the filtering process, the risk profiling process, we've now found out the margin available is to the downside only. We can't take the long. We've also got the target profit, which is very similar to the rest of them. And frankly, team, the margin available to the downside doesn't look that great either. So let's go back down to the 1 minute time frame. We'll be able to ascertain whether or not there is a margin available. Now we've got 0.1 and 0.2. We need the breaker structure point. The breaker structure point is going to be situated, I would say, around here. Even though we've had a fake out there, That is probably the best breaker structure point we have available. And that is not going to yield the kind of risk reward that we're looking for this afternoon. So at the very best, if you are the perfect trader, you get the perfect entry and the spreads do not impact you, you're looking at a 1 to 1.84. Now I would say that's probably going to decrease because we're going to have an entry realistically at around 62.62, and your stop loss is probably going to have to be a little bit wider than that because the margin's so thin between those 2 points of interest. That's going to bring you to a 1 to 1.66. So that's a no-goer. We don't like the S&P today, unfortunately. So our real, true trading prowess is going to be stuck with the NAS 100 and the US 30 Dow Jones, both of which have very solid, well-rounded positions on either side of the market. And that, ladies and gents, is that. So, do you have any questions for this afternoon, team, or have we got a good, clear understanding of what needs to be achieved? Excellent. Anyone else? Anyone else? Questions? Queries? All clear? Good afternoon to you, Cora Tim, as well. Good to see you, mate. All clear? Good. All right. Well then, team, on that note, I will wrap things up there. I hope you've enjoyed the session today. I hope you have a great trading afternoon. Let me know how you get on within the Traders Lounge, please. It would be great to see what happens out there. I will do the same, of course. And I'm very much looking forward to catching up with you all tomorrow. So take care, trade safe, and I'll see you then. Thanks, team. Bye-bye.